The slog continues.
You smell that? What is that?
What?
What's that smell?
A cologne?
No.
Opportunity.
No. Money.
Oh, okay.
I smell money.
Over the last few years, I've put myself in a position to where I have a good amount of assets, but I also have quite a few liabilities. So I'm trying to get some of that debt down to a more manageable level in the event that something bad were to happen to my asset pile. Not that I wouldn't take out some more debt if I ended up finding a really good deal, but the point is, in the meantime, I should be focusing on paying down debt, at least for now. I got off to a really good start with that in January, where I paid off over $20,000 in debt, so now I have a little bit more breathing room, and the goal is to keep doing something like that every single month for the rest of the year. Again, unless there's some great deal that makes sense, in my view, to pull out some more debt for, but I'm trying to be pretty measured on that from now on, more so than I have been in the past. I don't think I've been reckless to this point, but you get the idea. At the same time that I'm focusing on debt paydown, I'm also focusing on running my business, the carpet and steam cleaning business that I bought at the very beginning of January. We're a couple months into it now, and things have been going pretty well. There have been hiccups, of course, with the transition, and also the hiccups that come with running a service business in general, because you occasionally are going to get unsatisfied customers, so you do what you can to make them happy without bankrupting the company. But thankfully, those have been relatively rare, but it's something that I'm going to have to deal with throughout owning this business. Hiring a manager to help me with this business has been super helpful because he's able to focus his energy towards helping to grow the business, towards fulfilling our day-to-day services and getting those things done without me having to do a whole lot in the process. That frees me up to focus on other things, both in and outside of the business. Now, when it comes to the business, I can focus on driving new sales or implementing new systems or checking out new software or new things that could potentially improve things in the business without really having to do so much fulfillment. And the manager can also help with some of those things. It's more hours that can be spent towards the business, towards creating new things, towards improving existing things, and so on. And having a manager in place makes things a lot more flexible, to the point where I was able to take a week-long trip to Dubai to meet Karan Gurnani and attend his wedding. And that was a really great time, and it was just a very cool trip overall. My wife was with me the whole time as well, so she got to experience it too. And it would have been very difficult to do that without having a manager in place who could help me with the day-to-day while I was gone. By the way, that was the very first time I got to meet Karan in person, which was really cool, given that we met on YouTube a couple of years ago at this point. We've been talking every week over on the Punch Card Investing show. Go check that out if you haven't already, and check out Karan's channel as well. And it's just cool to see that because of YouTube, I was able to go and attend a wedding all the way across the world and meet some really cool people when I really wouldn't have been able to do that, at least nearly as easily, barring some crazy event outside of YouTube. Praise be to the YouTube gods. But now we're back from that trip, so it's time to get back at it in earnest. That said, let's get into this month's net worth numbers. As a reminder, last month, our net worth was just shy of $108,000. As always, let's start with the good stuff, the assets. The market surged forward in the early part of February, but have since come down quite a bit to where the month was largely flat, so my stock portfolio hasn't really changed a whole lot over the last month. And that applies to my retirement accounts as well. Not a whole lot has changed there. When it comes to our real estate holdings, I do want to mention for the Indianapolis rental property, that is now vacant, and unfortunately we have a nice mold issue in one of the bathrooms, so we are getting that all taken care of. We're going to obviously remediate that bathroom and then remodel it, and we're also going to spruce up things around the unit, especially in the kitchen, which really could use some work. It's just a little bit old and dingy looking, so trying to bring that up and help improve the rental value and the property value as well. I'm not sure if I'll reflect much of a change here on the net worth sheet once I'm done with that little rehab. Probably be a few $1,000s, probably no more than $10,000 by the time it's done, and it would all be coming out of reserves, so it's not going to really reflect here either way when it comes to cash, because I don't count my reserves on my net worth. Maybe that's too conservative, whatever, it doesn't really matter in the grand scheme of things. I have reserves set aside, and that's going to be used towards the rehab. And then we should get that rented back up pretty quickly. Although I will say I have been considering selling that property and either doing a 1031 exchange into a larger property, or just taking the cash and rolling it into a business venture, or simply using it to pay down debt, since there are plenty of things I could use that cash for. But I haven't done anything with it yet, though I did want to put it out there that I am thinking about it, because it is a relatively small property and I'm making a few $100s per month in cash flow on it, but you still have to maintain all the systems around it. I have to file taxes for it every year, and that's a bit of a hassle. So there are some headaches involved, and now we have this mold issue. It's just more things kind of to worry about. I'm not overly stressed by it by any means. It's still really only a few minutes per week at most, so it's not a ton of time, but it is more to think about and worry about. And I'm wondering if it would make more sense just to roll that into something a bit more scalable, or whatever I would use that cash for. But for now, I'm hanging on to the property. But all of that said, we currently have 1.275 million in assets. And now on to liabilities. Nearly every single balance on this liability sheet has gone down since last month, so that's a nice thing. Most notable would be my M1 finance margin, which is paid off once again. So I think I had $9,000 in margin at the end of last month, so that's all the way down to zero. So a lot of my money this month went towards that. So now I have no risk of a margin call, so that's nice. And I could always borrow against it again if I really needed to. But otherwise, I think I'm gonna focus a lot more on my personal loans next month. I'm making all the minimum payments, so you're gonna have sort of automatic principal pay down from that perspective, but I wanna put some more accelerated payments towards these loans now that I don't have the margin to worry about. So I'll probably be focusing a lot more on these in the coming months, just because they're higher interest and I can eliminate payments in the meantime because they're all kind of chopped up into little loans. So if I eliminate one balance on one of those loans, that eliminates a whole payment. So it's not like it's one giant payment that doesn't change no matter what the balance is. I can actually eliminate a loan and also eliminate a payment, so it helps me from a cash flow perspective once I pay one off. Although I do want to keep an eye on my HELOC because that is variable rate and rates continue to tick up. So eventually that might become one of the higher interest loans as well, and it makes sense to put more money towards that. Right now it's still right around 7%. I think it's 6.75 if I remember correctly, so it's right around there. Here's my debt paydown tab on my net worth tracker spreadsheet, which is always included in the description below, but you can see kind of the distribution of where all of the debt paydown is coming from. And this is net paydown, so not just payments, but actual principal paydown on these loans. And that came in at just over $12,000 for the month, which brings my cumulative total for 2023 up to just shy of $33,500. And my goal is to pay off $200,000 in debt by the end of the year. We're off to a decent start. Whatever the case, for the foreseeable future, a lot of my free cash should be going towards debt unless something crazy happens or there's some amazing deal that makes more sense to put the cash towards that instead. And just a reminder that about $15,000 of this credit card debt is interest-free for the next year, so don't be too alarmed when you see that. That will be a priority towards the middle of this year, maybe the latter half, because I don't want to ever pay interest on credit cards because the interest rates are so high. So I do want to be careful there as well. But in total, that leaves me with $1.162 million in liabilities, which means our net worth has grown to just over $113,000, which is a gain of just over $5,100, which means our debt ratio has decreased down to 91.13%, and our passive income remains at about $1,100 per month. So overall, it was another productive month. But long term, when it comes to the debt situation, I really don't want my debt ratio to be higher than 80%, we'll say. I really would like it to be lower than that, but kind of as a maximum threshold, probably 80 to 85% is getting to be quite high because you don't have a ton of room on the asset side of things if things were to fall and then all of a sudden you're underwater and you have a negative net worth, and that wouldn't be a very fun thing. If you can't liquidate your assets to pay off your debt, you're putting yourself in a much more vulnerable situation than if you had more space. And for me, at least over the past couple of years, I found it pretty hard to focus on paying down debt. Even when I say that, yes, I'd like to get rid of the debt, I still just can't seem to stop myself from going to buy something else, buying another real estate deal, buying this business. Granted, the business has a lot more cash flow involved, and with the real estate, the debt is covered by the rent, so it's not like I'm taking out debt to buy a boat or something. But it's still adding risk to things in general, because when I take out debt, it's an obligation to pay someone else. And even if the asset value vaporizes, I still have that obligation. I still have to pay someone back. So I'm gonna have to find some way to pay that person back, or that bank or that entity, whatever it is. So I really need to make sure that I'm careful when I'm dealing with any amount of debt. And it's gotten to the point that it's a bit uncomfortable seeing the levels of debt I have relative to my assets, even though I am in a pretty solid cash flow position. And to be fair, bringing it down to 80% leverage would still be a lot relative to many other people, because a lot of people don't have any debt or they have very little debt. And in my case, I do have a lot of debt relative to my net worth and to my asset pool. But now that I have this business to focus on, I feel like it's taken some of that mental energy that was going towards trying to find new opportunities to grow and always wanting to invest it into more stocks, into more real estate. It's kind of taken some of that attention away in a productive way to where I could use it towards trying to grow cash flow or trying to build out systems and make things easier for the business. And since I'm putting less energy towards those things, I found it a bit easier just to throw the money towards debt, forget about it. I don't want to put a bunch of effort into trying to find a place to put it besides just paying down the debt, since that just seems easier and it is productive in the long run, since it's now someone that I don't have to pay back at least as much, assuming I needed to pay everyone back at once. In general, less debt is less risk. The liquidity does matter. I want to make sure that I still have cash to make payments in the event that cash flow were to fall in a big way for some reason. If something were to happen to my job or the business or both, I want to make sure that we have some space to try and recover, because you still have all those obligations, so you want to make sure you can meet them. Otherwise, the whole house would come crumbling down, and that would not be fun. There's definitely a distinction between being highly leveraged and over leveraged. And I like to think that I'm not over leveraged, but then again, doesn't everyone think that they're not over leveraged until it's too late? I probably should stop before I scare myself too much. But if we can reach that $200,000 in net debt pay down, that would be a really great step towards deleveraging and putting ourselves in a really strong financial position to where we would have less to worry about and we could take actually greater risks, because there's less of a risk of bankruptcy or some sort of debt default because you have more space to work with. And getting to that point appears to be the hardest part of any financial journey. And I'll be continuing to document my journey here on YouTube, so be sure to subscribe so you don't miss future updates. I put out a new episode of this series every single month on the first of the month. Regardless, thanks for watching.